Let us quickly go to question 2, which is company financial statement. It will take you 39 minutes. So we've got information relating to Springs Limited. I have actually attached the link to this paper. Check under comments or under description. So we know that we are operating as Springs Limited, which is just a private company. I mean a public company. Then it says Springs Limited is a South African listed company with an authorized share capital of 5 million. And those are ordinary shares. They import and buy from local suppliers in order to supply retail stores with stationery products. They use a standard markup of 75%. Now that is important. I will highlight that. And they gave us extracted balance from the financial records on the 1st of March, which is the beginning of the financial year. This is very concerning because nobody accrued income from last year will be reversed at the beginning of the year, but we still have it in this case. So it was not reversed, which is very concerning. And this related to interest on fixed deposit. I'll wait until I get to the adjustment that relates to interest on fixed deposit. All right, and then they gave us information about sales, cost of sales, debtors allowances, stationery. That's 688,000, which is your ordinary share dividends. It'll go to retained income as interim dividends. And then we've got depreciation on vehicles of 84,800, which will be recorded under expenses. Now, all I'm going to do is to go to my sales and subtract the debtors allowance that was given there in the pre-adjustment trial balance, and then just stop there. There's absolutely nothing I can do after that. And this information here, I will come back to it when I prepare my retained income note number. This information here, I'll come back to it. I will just start with additional information. Number 1 says that a debtor returned stock that was sold for 23,800. So when a debtor returns goods, 4 accounts will be affected. The first one will be debit debtors allowances, credit debtors control, which is what you need to do here. You will debit debtors control. You will debit debtors allowances and credit debtors control. It has 4 accounts affected, all right? So these accounts, as I've said, these ones will be at selling price, debiting debtors allowances by 23,800 and crediting debtors control. So that 23,800, I will subtract it from sales because an increase in debtors allowances reduces your sales. Guys, I posted videos during the day for grade 10s. Please check them out. Please check them out because even in the video I did ask for grade 11s and 12s to watch those videos because it'll help you a lot, especially with the basics that you forgot. So everything that I'm explaining here, I did explain it in that video. So I will subtract the 23,800 from sales and I'll go to trade and other receivables. And in trade and other receivables, I will simply subtract it from debtors control. That's the first entry. Done, guys. You get your 2 marks, you're done, you move. This is an exam. You don't have time to waste. Now, the other 2 accounts will be trading stock and cost of sales. You know this from grade 10 when you did the general knowledge of the cost of sales. Cost of sales will only be reduced by the cost price of goods returned. Now, here, I needed to find the cost price. I was given the markup of 75%. That's why I highlighted it. Now, to get the cost price, I had to take the selling price of 23,800, multiply it by 100, and divide it by 175. So cost of sales here will be 13,600. With this, I will normally increase my trading stock by 13,600, debit it, and then credit my cost of sales. So I will need to increase my trading stock and reduce my cost of sales. So I'll go there and reduce my cost of sales by 13,600. I might as well close sales as well as cost of sales. Make sure with cost of sales you put it in brackets. So 9,414,200 minus 4,616,400 will give you gross profit of 4,797,800, and just leave it there. We'll go to my trading stock. When I get to my trading stock, please note that I would actually increase it and then decrease it by that 13,600. That is because that stock, it was mentioned in the adjustment that it was returned to the supplier. Okay, it was returned to the supplier. And the supplier gave us, well, the supplier allowed the return, but they penalized us. They gave us 15% penalty. That is after the number of days allowed. So basically, we kept these goods for too long, and therefore we are going to be charged penalty. I'll get to that part just now. For now, I will simply record it in my, as I've said, I will simply decrease my cost of sales. All right, that's why I have a 13,600. And at the same time, please note that because of that, there are other two accounts that will be affected in addition to these four accounts above. Since these goods were returned to the supplier with a penalty charged, the following three accounts will also be affected. So we need to reduce our creditors' control by only 85% because that's what the supplier will reduce our account by, because they're penalizing us. They gave us a penalty of 15%, keeping those goods for too long. We stayed too long before we returned the goods. That's why they're giving us 15% discount. 15% penalty. Now I will need to go to trade and other payables, and in trade and other payables, I will subtract that 11,560 because it will reduce my creditors' control. At the same time, the 15% that was a penalty is an expense, all right? Because we're reducing our trading stock by the whole 13,600. Remember, we increased it by 13,600. Now we're decreasing it by 13,600. That's why when I calculated my trading stock, I said it's plus minus 13,600. But you need to understand that of these 13,600 that we reduce our trading stock by, 11,560 went back to the creditor. However, we got charged a penalty, and a penalty is an expense. That is why the 2014, we are going to record it under operating expenses as penalty charged or loss due to goods being returned to the creditor, and that will be 2014. Okay, I'm basically done with that transaction. Let us move on. That is done. Now, number 2 says that a window was left open during major storm. As a result, 14,000 worth of stock was damaged. Immediately when you see that, you go to your trading stock, you subtract the whole amount of stock that was damaged. I will do this when I calculate my trading stocks. I will just subtract the whole amount of the loss. So that lost amount, stock lost of 14,000, that whole amount will be deducted from trading stock, right? Let me just read further to hear what they said. And then they said that the insurance company agreed to pay for the damaged stock less 15% excess. So they will give us, they will actually pay us only 85 because they won't give up 15%. 15% is when you claim an insurance excess. When you claim an insurance, you'll be required to pay 15% of what you lost, and the insurance company will cover everything. In essence, you are losing 15%, and the insurance company will pay you 85%. That's what actually is going to happen here. So you are going to take that 14,000 and multiply by 15%, and that 15% will be the loss. And the insurance payout will only be 85%. So that insurance payout of 85%, if it has not been received, here they didn't specify whether it was received or not. If it has not been received, and since they didn't specify, it means that that 11,900 has not, because they said that, let me just read it for you. It says that the insurance company agreed to pay for the damaged stock less, agreed, meaning that they haven't done it, they agreed to pay for it. Now, because they haven't paid us yet, that receivable, insurance receivable, we are going to record it in trade and other receivables as insurance receivable, or you can include it under accrued income, it's up to you. And the amount will be 11,900. Please note that the 15% that I spoke about will be a loss due to damage. And loss due to damage is an expense, therefore we will have to record it under operating expenses as such. So it will be loss due to damage. The amount will be 2,100. Done with it. Let us move on. The next point says that, note that sometimes they'll say that 6,000 was stolen, cash was stolen. So that means 6,000 will be a loss. You just subtract it from your bank account and then you recognize the whole thing as a loss. Okay. Especially when that cash was not insured. So you need to pay attention, you read everything carefully. Number 3 says that the stock take revealed the following. So this is when they counted stock. I will just close my trading stock calculation as I have adjusted it from the trial balance. So I'll be left with the adjusted amount for trading stock will be 1,504,600. But the stock counted was 1,482,400. Now the counted is actually less than what was recorded or adjusted in pre-adjustment trial balance. So we have in the pre-adjustment trial balance, we need to bring it down to what was counted. When you bring it down to what was counted, the difference will be trading stock deficit. Please make sure you're writing in full trading stock deficit. Because when you put it as trading stock in the statement of profit or loss, guys, that is just a -1 because it's a foreign item. And all you have to do here is to take that loss or trading stock deficit and record it under expenses as such. And the amount there will be 22,200. All right, done. Then they say to you, stationery used during the year was 25,800. I'm just going to go back and check how much I have purchased as stationery. Please pay attention to consumable stores on hand here from the previous year. If they're related to stationery, I was going to add it with the 29,400 and then find the difference. So, but the one that was used, we automatically recorded as our stationery expense in the statement of profit or loss. So that's why for stationery expense, I'm going to have 25,800. Then the difference, which was unused, will be what we call consumable stores on hand. And that will be 3,600. Please note that whatever you subtract from your stationery must be the stationery that was not used, not the used. The used one will come straight to this column as I have indicated here. So in this column, you only record stationery that was used. Counting is amazing, guys. Trust me. If we were asked for inventory note, I was going to take that 3,600 and record it in my inventory note as consumable stores on hand. Let us move on. Number 4 says that the following error needs to be corrected. A debtor who had been previously written off as a bad debt returned to pay his debt of 6,400. This has been incorrectly recorded. So you need to ask yourself, what was the correct entry? The correct entry was to debit bank and credit bad debt recovered. So we did not do that. Instead of crediting bad debt recovered, we debited it. And by debiting it, it means that to correct this, we did not credit the first time by 6,400 and credit it again the second time. The second time is to make the correct entry. The first entry is to correct this. So to reverse this, you will debit debtors control. That means that your debtors control amount that you have in the trial balance has been valued at a wrong amount. So I'm going to go to trade and other receivables. And when I get to trade and other receivables, I am going to add that 6,400. Okay, after adding it there, that 6,400, I have to recognize it as bad debts recovered. But already our bad debts recovered, we have added the 6,000, we have actually subtracted the 6,400. The reason why I'm saying we've already subtracted it, it is because it was dated. So that 8,200 excludes 6,400 because bad debts recovered its income. When you debited it, means you reduced it. So you're going to correct the error first by increasing it. So the minus 6,400 and the plus 6,400 will cancel out. And then add the 6,400 because instead of decreasing bad debts recovered, they were supposed to increase it. So the first plus of 6,400 is to correct the error. The second plus is just to make the correct entry. I hope you remember this from correction of errors in grade 10 when you prepare the general journal. It's still the same principle. And your bad debts recovered income will be 21,000 Rand. That's it. All right? We good? Great. Let's move on. Now we need to adjust or calculate provision for bad debts, which must be adjusted to 4% of trade debtors. I am going to go straight to my trade and other receivables. And when I get to my trade and other receivables, I will close my debtors control. What happened here? Okay, I will close my debtors control. Okay, and then after closing my debtors control, take whatever I have as the debtors control balance. That is good debts. Right. That 281,600 is good debts. Please, guys, check out all my videos. If you still don't understand financial statements, please watch all my videos before your exam tomorrow. Okay. And I'm going to take that 281,600 and multiply it by 4%. It'll give me my provision for bad debts, of which I need to put in bracket, which will be 11,264. I might as well calculate my net trade debtors by taking 281,600 minus 11,264. I will get 270,336. That's 6. Right. Now, what I'm going to do is to compare the provision that I've just calculated with the provision that was in the trial balance. In the trial balance, provision was 12,300. The one that I just calculated is 11,264. Now, the one that I calculated is less than what was in the trial balance. So here you will have income, because the one that in the trial balance, you have to bring it down. You will have income, which is provision for bad debts adjustment of 1,036. That 1,036 will be recorded under operating income as provision for bad debt adjustment. Don't forget that word, adjustment. Because when you write it as just provision for bad debts, provision for bad debts is normally subtracted from trading other receivables. So if you don't write that provision, that adjustment, it's just the one that needs to be subtracted from debtors controlling trade and other receivables. So it'll be -1, it'll be foreign items if you don't include the word adjustment. The amount here will be 1,036. Again, done. 36. Okay, now it's taking me to another question, which I do not want at all. Let's move on. Then it says, number 6, that the interest on the fixed deposit is not capitalized, right? The bookkeeper forgot to reverse the interest on the fixed deposit at the beginning of the year, and the fixed deposit was increased during the year, and an amount of 12,200 for interest is still owed by the investment bank. First of all, I'm going to reverse what was not reversed at the beginning of the year. To reverse it, I'm going to go to trade and other receivables. Because I've got accrued income of 8,400, I'm going to subtract it because it was supposed to be there. It was a current asset for last year. This year it can't be a current asset, especially at the end of this year. It can't be a current asset. Current asset is something that we convert into cash within 12 months. So we have passed 12 months already. That's why we can't have it as accrued income. And this accrued income. So we are going to credit accrued income and debit interest on a fixed deposit, meaning that our interest on a fixed deposit must also be reduced by that 6,400 because that interest was earned last year. It was not earned this year. That means our interest on fixed deposit for the current year has been overstated. Then they told you that we still have not received 12,200, which is what we have earned. That will increase our interest on fixed deposit, taking it to 127,400 because it is income. In the statement of profit or loss, I will show it without brackets, but that 12,200 is accrued expense, accrued income for the current year. We will have to add it to accrued income in trading other receivables, taking us up to 156,200. Done again. Guys, if you keep the basics, if you keep and you remember the basics in accounting, thou shalt never, never fail the first commandment. Thou shalt never fail accounting. It is pretty much straightforward, but you need to play your ball, okay? Okay, let me just move on. Sorry for the long break. All right, and that's it. Let's go to number 7, which says that commission income of 48 rand per unit sold on behalf of Dini Diary. The commission on the January sales of 3,000 units is still owed to Springs Limited. I will take that 3,000 and multiply it by 48 to get my commission, my total commission. And let's see how much that will give me. So it will give me 144, but it's still outstanding. This 144,000 is still outstanding. I have not yet received it. I have earned it, but I have not yet received it. I am going to add that 144,000 to my commission income. That will take my commission up to 226,000. At the same time, I have not yet received it. Since I have not yet received it, it's still outstanding. I'll have to record it and treat them other receivables as accrued. Now it'll take my accrued income to 156,200. Easy, counting is very easy, guys. Just don't forget the basics. I would actually also recommend for grade 11s to check this out and the grade 10s as well. Just ignore it where it talks about tax and dividends. That's all, but everything else is pretty much the same as what you have learned. Let's go to number transaction 8. An additional store manager was appointed on the 1st of February 2023. The salary slab forgot to record her February salary. So they forgot to record the salary only for 1 month. All right, and you're given a gross salary for 12 months there. So to get a monthly salary, I'm going to take this 432,000 divided by 12. How much is that? It'll give us 36,000, which is our gross salary. If you have watched the previous video for grade 10s, you will have noticed that I did something similar to this. Therefore, that gross salary, we are going to add it to salaries and wages. It's our expense. We'll add it to salaries and wages and operating expenses. You're going to have 36,000. Therefore, our salaries and wages will go up to 1,764,000. All right, done with gross salary. What's next? What else did they say? Then they said pension fund is 8% of gross salary. Okay, fine. Sales pay as you earn is 9,000 per month. That's good because that one is given per month. And then they say the company contributes on a rent for rent basis to the pension fund. Now that's where we come in. So I will firstly find 8% of 432 and then divide that by 12. We'll just find 8% of 36,000 and that'll give us 2,880, which is an extra expense to us. That's why we're adding it to pension fund contribution. All right. And our pension contribution, which is an expense, will go up to 140,120. Now I'm going to go to, with respect to salaries, I have to record everything in trade and other payables. Just remember that we have to record creditors for salaries. So I'm going to take that as 6,000 and then I'm going to minus pension that was deducted from the employee, which is 2,880. And then I'm going to subtract the medical aid. No, it wasn't medical aid, it was sales pay as you earn. And that amount was 9,000. Okay, let me just confirm that. That is what we owe this employee that was omitted. Just want to confirm that because right now I'm just using my memory. It says pay as you earn, so I was right. It's still owed to the employee. The net salary is owed to the employee. We write it as creditors for salaries. Then we are going to have sales income tax. And when I look at sales, not sales income tax, sales pay as you earn, I will start with the balances that I've got. And you will notice that already we had the 9,600. So it'll be increased by this extra tax amount from the employee that was omitted. And the total must be paid over to sales. That's why we included under trade and other payables. So it'll be 48,600. For pension fund, let me see if we were owing anything for pension in our trial balance, pension fund to the pension fund. You are going to take what you have here, pension fund, we do, which is 13,800. So now we owe the pension fund at 13,800 plus what we contributed to the employee, which is 2,880, plus what the employee contributed to the same pension fund, which was deducted from their salary, which is the same 2,880. Our pension fund, the amount we owe to the pension fund in total will be 48,360. That's it. Done with the salaries. Let us move on. All right, the next one is about interest on loan is up to date, but must be recorded. So we have not recorded interest on loan. They're telling you that an additional loan amount of 260 was taken during the year as the entity was under financial constraint. Okay. An annual loan repayment of 500,000 is made and recorded on the 1st of December each year. Okay. So they say nothing about anything not being recorded since they are silent. So it means that 260 was already recorded, that 500,000 rand was already recorded for the current year. And when it comes to the loan balance that we are given in the pre-adjustment trial balance, which is that 1,050,000, it means 260 is already in there. The 500,000 that was paid on the 1st of December 2022 was already subtracted. In essence, that takes up into account the loan that was received. It also takes into account the repayment. What I'm going to do is to write it as it is and then compare it to what was given to us. They say according to the loan statement at the end of the year, we are owing the loan statement received from Lee Bank on the 28th of February 2028 reflected a closing balance of 1,410,000. So I'm just going to compare 1,050,000 to 1,410,000. The difference will be our interest on loan, which is what was not recorded. That is the only thing that was not recorded. And that interest on loan, which will be here, 360,000, we are going to add it to expenses, interest expense, right at the bottom of your statement of profit or loss. Okay, so that'll be your interest expense. Put it in brackets, which is 360,000. All right, let's read further. They say after the income tax on the net profit had been accounted for, the company still owed SARS 24,000. So we owe SARS 24,000 with respect to income tax. I'll take the amount that we owe immediately and take it to trade in other payables because that's what we owe SARS. Before we get there, I forgot to record something here relating to the loan. They said we pay 150 every year. So on the 1st of December 2023, we are expecting to pay 500,000 rand towards the loan. That is between the end of this year and the end of next year. So we expect that 500,000 to be paid within 12 months. Since I'm not given the statement of financial position, I am going to write it in trade and other payables as the current portion of the loan, which will be 500,000. Now back to interest, that amount, back to income tax, that amount we still owe to SARS, which is 24,000. I'm going to write it here in trade and other payables as such, which is 24,000. To calculate my income tax, they say that we still owe SARS. It means that we must have done something. So yeah, we have, because we have SARS income tax, which is on the debit side. And the fact that SARS income tax is on the debit side, it represents provisional payments. So we made provisional payments amounting to 960,000. and we still ended up owing 24,000. That means that our income tax for the current year was more than our provision for provisional payments. Since it was more than the provisional payments, that means our income tax will be that 960, which is our provisional payments, plus the 24,000 that we still owe. That will give us our income tax for the year. So that's what we will write in our statement of profit or loss as income tax for the year. So we'll write it here as income tax for the year. You add the two, and the income tax for the year will be 984,000. So you will just take your profit before tax minus the 984,000. You will get 2,016,000. That 2,016,000, you will take it straight to your retained income and record it in retained income as profit after tax. That's it. Let me see if I'm done with all the adjustments here. Okay, they're talking about final dividends, but before I can consider final dividends, I'm going to go to what I ignored earlier on, which is that point number 1 there. They gave us our ordinary share capital need. They said we bought back, so this normally you will put it in brackets, and then whatever you write here must be APPS. So we don't have that APPS, but APPS is simply your share capital before the buyback divided by the number of shares issued before the buyback. So you will take that 18,400,000 and it will be how much? 18,490,000 and then just divide it by 8,600,000. It'll give you your APPS, which will be 2,15. So APPS here will be 2,15. So that's what we'll normally put here. So you will put it as 2 rand 15 cents. And then we will multiply it by the number of shares issued, and then we will normally subtract that value here. But this was not important. Why do I need that? It's because they spoke about the buyback. And they said we bought back these shares at 2.76. The average price was 2.15. So when the buyback price is more than APPS, the difference will be a loss because it means that we bought back the shares for more than what we initially received for them. So that loss due to buyback will be recorded in retained income as loss due to buyback. Which will be the 276 minus 250 multiplied by the number of shares that we bought back, which was 120. That will give us the loss due to the buyback of 73,200. Make sure you put it into brackets. I still have people that take the buyback price and just multiply it by the number of shares bought back and they say it's a loss. No, guys, a loss is when you take buyback price per share minus APPS, average price per share. Please remember that. Okay. Earlier when I told you about the interim dividends that were given to us in the pre-adjustment trial balance, you will record them as interim dividends. For final dividends, it is the last point. What does it say? It says that interim dividends were paid during the year. Good. A final dividends of 9 cents per share on all shares in issue at the end was declared on May 28th. So I'm going to go to my ordinary share capital and check how many shares were in issue at the end of the year, which will be the 28th of February 2023. Shares in issue on that day will be 8,480,000. You just take that and multiply it by 9%, and that will give you final dividends. And your final dividends here will be 763,200. That's 763,200 because it represents my final dividends. I also have to record it in trade and other payables as shareholders for dividends. Okay, done. Now I'm just left with my retained income. Let me just complete that. I will calculate my ordinary share dividends, which is your interim plus your final. You put that in brackets. Then you're going to take this, add it with that, and then subtract this, subtract that, and then you will get your balance of retained income at the end of the year, which will be 3,281,600. That's it, guys. Done. All right. Yeah. When my students are writing the day before, I also can't sleep as well, you know. I want this so bad, guys. I really, really want this so bad. I I would like my accounting department to be the best in the East End, and I'm working so hard. That's why I get to be nervous the day before my students write. But I'm still building. Soon. If not next year, definitely I know within the next 3 years, it should be one of the best. And when I talk about being one of the best, you should be getting 10 distinctions or more. That's why I'm working tirelessly to make sure that dream is achieved. I'm saying it right now, but I need you to understand that you don't just end by dreaming. You work for it. And this is what I always tell my students. At times I feel like I'm the only one that's really working really hard. If I could get the same energy from them, it would be fun. Very fun. It's one dream that I will not give up anytime soon, that I'm willing to sacrifice anything for. It has to be done. It must be done, and it will be done. All right. Try this cash flow statement. Complete this. That. That, as well as the full cash flow statement. And check out the next video for solutions to that. But give yourself 29 minutes. Do it and then come back to. Okay. Remember, just as hint, cash flow statement, it's all about cash. We don't care about losses. We don't care about carrying values. We don't care about profits. The only thing we care about is money. Was money received or was money lost? Was money received inflow or was money lost outflow? That's all we care about. You get it? You did? That's great. Thank you for watching. Please share with your friends that will be writing tomorrow as well. Let them know that there's this cool channel that will help them pass. Don't forget to subscribe and share with everybody in your circle. Khotso.